Hey traders, Jason here from Levy Brothers. Hope you're doing well. I wanted to do an update of my State of the Market series. Market's been up and down, mostly flat for the last couple of months, but within a range. There's been a lot of up and down movement. A lot of stocks did great, and then they just got hammered. So I want to take a step back after a holiday week where the market did really well and just kind of get an idea of what exactly is going on here. All right, first, quick announcement. Black Friday special is live at Levitt Brothers. Buy an annual membership, get 3 months free. Do the math. It comes out to be less than $50 a month. A great deal. Lots of great testimonials. Lots of traders doing very, very well. Check us out. New memberships come with a 2-week free trial, so there's actually not even a risk for trying us out. So you can go to the homepage at Levitt Brothers, click subscribe, you can sign up for a year, and we will manually add the extra 3 months. All right, let's get into this now. All right, so let's go through the indexes first, then we'll look at breadth as we typically do. Here is the S&P 500 monthly going back to 2018. Looks good overall. I mean, here, we had COVID over here, and then we had this long, kind of drawn out bear market in 2022. Morphed into like a 2-year cup and a handle pattern. Huge rally 2024. This is all the tariff stuff, and now we've had 1, 2, 3, 4, 5, 6, 7 consecutive months posting a gain in a row. And if you look really close, last month we opened up a little bit up, dipped during the month, and then we just recovered and basically closed flat. Okay, overall not bad. Okay, long-term trend is up, above lots of key moving averages. Nothing really stands out as being overly, a big warning. The trend is up. We got to favor the long side, but the most important thing is you got to be in the right stuff, because we know that we've had 2 months here where we've traded in a range, and within those 2 months we've had some stocks post huge wins and huge losses, and other stocks are very quiet. So it's always the case that you have to be in the right stuff. It's even more the case now. Okay, a rising tide is not raising all ships. Not everything is doing great. When the market dips, some stocks are just dipping a little bit. Others are getting crushed. So you got to be in the right stuff. You can't just buy a whole bunch of stuff and just expect, some sort of pray and spray theory is going to work. It might not. You could buy 10 stocks, and the losses from like 2 of them could easily overwhelm the gains from the other 8. That's the volatility we're having beneath the surface. So overall, looking good. The light, as we would say, is green. So here's the weekly chart going back about 2 years, 2.5 years. Over the last 2.5 months or so, we've just had flat trading. Okay, nothing wrong with that. We had a big dip here over this, spring, recovery, huge rally, all-time highs, everything doing great. Lots of, thematic stocks out there leading the way, posting big gains, but over the last 2 months, we've been sideways. It's not bullish. It's not bearish. The market is just kind of digesting its gains. Money's shifting around. As I said a minute ago, you just got to be in the right stuff, because, like right here, we had like 3 consecutive down weeks in a row. During those 3 consecutive down weeks, there were like high-flying stocks that went from 10 up to 20, corrected all the way back down to 15, 14, 13. Okay, so a small move in the market resulted in a big move from individual stocks. So you got to be in the right stuff. Overall, I'd say the market's in good shape. It's trending up. It's consolidating within an uptrend above key moving averages. Everything looks good. You just got to be in the right stuff, because beneath the surface, stuff is really moving around. And here is the daily chart. Gives us a little bit glimpse of some of the volatility. Had a breakout here, which pretty much failed because it gave it all back. We had a lower low here, at least matching the previous lows, and then that got bought up. So fake move up, fake move down, and after 2 months, the market is mostly unchanged. Okay, so you could look at that. I think it's best not to have too strong of a bias here. We move into December. December tends to be a pretty strong month, but we can't have too strong of a bias. If we get a back kiss here of some moving averages and go, then I would say we increase our bullishness, but we also have to consider the possibility that, we have some sort of a neckline here, and maybe this is like left side, maybe this is like a bigger side, and maybe this is a top. I don't know. But at this exact point in time, nice rally, flat trading over the last couple months, being the right stuff. I'd consider the market to be kind of neutral here and not have like a really strong bias as we head into December. All right, let's look at some breadth readings. Okay, here's the S&P 500 versus the 5-day moving average of the NYSE 80 line. We went from the lowest level since April to the highest level since April. So it's a huge 5-day turnaround in the advanced decline line. It's good, okay? But let's, it's got to continue. I would say like that kind of a move moves the market from like maybe leaning down to leaning up, but it still has some proving to do. Like during the uptrend here, we had a lot more prints above zero than below zero, but then as the rally here matured, we had like equal prints above and below, and you could just see like the location of these two badly drawn ovals that where we had higher prints and then lower prints, and like so if we can get another period of higher prints, that's great. The market will trend up, but like I think what happened last week just kind of brings the market back to life. Instead of leaning down, it's leaning up, but it's got some proving to do. Here is the 10, 20, and 50-day moving average of the same stuff. Same thing. It's like we had, for the 10 moving average, we had a lot of prints below zero for 2 months, and then we got a decent print. So that kind of brings it back to life, but it has more proving to do. It's got to stay there. It can't just be one move above zero and then we're all clear. It's like it's got to be more than that. The 20-day moving average has kind of been trending down for a couple months. Lower highs, lower lows. Got a nice move up last week here that matched some previous highs here and here. But again, we need a higher print. We need to come back and back test. We need to be able to stay mostly above zero. So last week kind of brings it back into focus instead of lowest print since the April low. Now we're back above zero. It's good. It's a good start, but it's got to continue. And then with the 50-day moving average of the AD line, I mean, this thing's been trending down since early July. So last week we got back above zero. It's good. It's a good start, but it's got to continue. Okay, we can't just have one good week. So last week was great. One good week kind of rescues the market because it was kind of on edge there, and it could have really like plunged pretty easily. But like last week kind of backstopped it, but now the market can take a breather and it's got to continue. It can't go backwards from here. All right, and last one with the 80 line. This is essentially the Zweig breadth thrust. It's a 10-day moving average of advancers versus total stocks. And what that indicator is if you get a move, let's see here, if you get a move from below 40% to above 61.5% in a 10-day period, the forward returns tend to be very good. Okay, so last week we did indeed bottom out below 40%, but we haven't gotten to 61.5% yet, and it's got to do that in the next couple days in order for this to trigger. So it has potential, just not there yet. Other thing I want to point out is that we're finally above, into this box here that I drew. If you notice, I'm going to change colors. If you notice, during the downtrend here, we had no prints up here. Okay, all the prints were below. Okay, of course, the market was weak. It was trending down. But come to today, market is trending up, and we've had no prints above here for like 2 months. Okay, until last week. So the market, moved up and then was flat, even though beneath the surface, the breadth wasn't very good. Last week we get a move up. It's good. It's a good start. But if the market's going to trend up, we don't want to have, it's got to be better. We need higher prints. We need consistently higher prints. We can't have these big plunges down, well below 50%. Okay, so as with the other charts that I've shown last couple of minutes, last week kind of puts the bulls a little bit back in charge, but they have proving to do. I definitely would not be gung-ho optimistic going into the next month unless we get further improvement. All right, here's the S&P 500 versus S&P stocks above their 20-day moving average and above 50-day moving average. And you could see, this trended down. this trended down, but then last week we got these big pops. 74% of stocks above their 20s, 63% of stocks above their 50s. It's a great start. It's got to continue. Okay, we get these thrusts lower here, lower here, lower here, lower here. That's a sign of a market that's in trouble. The distribution is taking place. Last week we got a nice thrust up. It's great. It's got to hold. Okay. If this thing pulls back here, get a little damage, but then we can hold it and move up again, that'd be great. That would be like all clear. Let's get more aggressively long, as we get to the end of the year. But if this thing can't hold, if this thing falls below 50% and can't recover, then, last week was just a one week wonder. So good week last week, got, more work to be done. Here's the same stuff with the NASDAQ stocks above their 20, above their 50. This is always going to lag the S&P because there's some low quality stocks there that they just trend down forever. So anyways, nice move up here above 50%, move here back to 50%. It's got to continue. I mean, obviously you can see that when the market is trending up, you get lots of prints above 50%, lots of prints above 50%. Going backwards during a downtrend, lots of prints below 50%, below 50%. So we need to get above 50% and hold. Last week was a good start, but it's got to continue. All right, now we have the 1 month high low. This is all stocks, 1 month high low. Okay, it was trending down for a couple months. Last month it popped. Now it's above zero again. Again, it's a good start. That's all I can say. It's a good start. I'm not going to be gung-ho bullish here. It's a good start, but improvement is needed. If anything, last week, neutralized the downtrend, okay, because the market had fallen a bunch. A lot of stocks had gotten hit hard, and last week kind of reversed that, and I don't want to say puts the bulls completely back in control, but at the very least, it neutralized the downtrend, and now the bulls could take a breather if they want for a few days, but they got to build on these gains and at the very least hold the current levels. Same thing here. This is the all stocks 3 month high low, trended down for a couple of months, popped last week, got above a couple previous highs. It's a start. More improvement is needed. If I look back over here to last year, you get these dip here, and you get dips down to minus 1,000, dips down to minus 1,000. Then when we got this recovery back to new highs, this barely got above zero. It's basically straddling zero for an entire month, and then of course the market drops. So if I look over here, we get a dip here. Now we got a move above zero. If we just flatline here above zero, I'm not going to be too optimistic. We need higher prints to really prove that there's there's a decent amount of stocks participating. Last one here. This is same idea with 52-week high lows. This is we had the lowest print here since back in April. So all it took was this little bit of a move down, and boom, there's 400 more new lows than there are new highs. But we got a nice recovery here above zero. Again, it's a good start, but it's not enough to launch a year-end rally. More improvement is needed. Okay, one more chart. I've talked about this before. Oftentimes in an uptrend, you get little move that moves down, and you get a big spike in new lows. Okay, so what we have here, looking back to last year, we had this move down here, relatively small. This move down here, a little bit bigger, still small. And what we saw here is we got warning shots here. Not big spikes, but noticeable spikes in the large cap new lows, mid cap new lows, small cap new lows. And what often happens, those spikes within an uptrend are warning shots that a month or two later you get a top. Okay, so when you get these spikes in the new lows, when the market actually is doing fairly well, it's a warning shot that something's brewing underneath the surface. So if I look at today, we have warning shots here. Does this portend some sort of top looking out to January? I don't know, but it's something we got to keep in mind, that a little bit of a move down here, a little bit bigger move down here should not result in a huge uptick in new lows. So to me, it's a warning. It's something to keep in the back of our mind. even if the market does continue to find its footing here and we get a nice year-end rally, keep in mind we're getting some warning shots here, and maybe we top in January, February. I don't know. It's just kind of something to keep in mind. You don't want to like throw all caution to the wind and get careless with managing positions. All right, so that's all I got for now. Overall, last week went a long way to reversing the market up. Okay, it had been weakening, a lot of prints at multi-month lows, at a time when the market tends to be pretty good. But last week was really good. A lot of prints back above zero. If anything, it just neutralized the downtrend. Now the market could, starting here, the market could build. And if momentum builds, we could get a nice year-end rally. Okay, but just keep in mind that like we need more improvement. Okay, last week was a nice start, but we need more. I definitely don't think we're in the clear. I don't think we can throw all caution to the wind and just start buying recklessly and thinking that we're all going to get rich. I think we still got to be responsible here because the market's doing okay, but it's not doing that great. All right, we'll see you next time. Don't forget about the special offer.